Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, into the action we go today on this Wednesday, November 6th, 2013. Market closes in less than 30 minutes, and we can see the markets are trading slightly higher today, but there are some very intriguing facts that I'd like to bring to your attention. So, if you've been watching my last few free videos, you guys know, simply put, you have a couple major levels here that we're watching. Number one, we're watching the double top from Fed Day up here, which was at the 177.51 level, and the low from Fed Day right here, which is at 175.65. Now, the reason why we're watching those levels is because that's the reversal day that you have to look at as being a significant signal to this market. And what I told you guys in the last few videos was look to see if we break above that on a closing end of day basis or below on a closing day end of day basis. So right here, you're looking to see, do we close above that level here or do we close below that level? That will dictate the future trend in this market. Well, interestingly enough, today we gapped up, right? And we pushed higher and we tested the high. But interestingly enough, you couldn't even get through that high. You came 1 penny short of hitting the high from Fed Day and then reversed. And the reversal was very, very strong here. Look at the market, how it sold all the way off, almost back down to the flat line after a pretty substantial gain. Now, interesting, from that point on, we kind of floated up, volume very, very light here in this middle portion of the day, which is the usual. If you look at every day, right, the lows are made kind of in the late morning or mid-morning session, and then we float up the rest of the day. Same thing here, low, float up, low, float up. And today, really no difference. You got the reversal and you floated the rest of the day. So that's the standard, and that's a light volume standard. But, again, based on what I'm seeing today, we have no definitive breakout or breakdown in this market. The market continues to be in this general vicinity of what I call purgatory, and we're still waiting for that directional move in the markets. And again, remember, if you close below the low from Fed Day, that's a breakdown. The market should see further selling and quite a bit of substantial selling. If you break to the upside, you should see a little bit more upside, although I think the upside will be somewhat limited. So going forward in the next couple days, just continue to remember that. Today, it tested the highs, but was repelled back down. Right? We're still stuck in, the purgatory of this market. And again, to me, even though the markets are slightly higher today on the SPY, interestingly enough, the NASDAQ is actually down, but we have the Dow up 106 points and S&P up about 5 points. But overall, this market is still, to me, in a weak position. All right, anytime you have a possibility that the markets could come down in the short run and break below certain key lows, and here's the Fed Day low right here, and then we're trading at all-time highs, you have to err on the side of caution more so. It's not necessarily saying that I think we'll break down, even though I am in that camp just a little bit. It's more so saying that even if we go up, what's there up to the upside? What kind of upside potential is there? Another 3%, another 5%, maybe another 7%, as opposed to the downside, you have a market that is this bubblicious. And again, if I go to the daily chart, take a look at where we've come. Just this year alone, the markets are up 30%. If you go back to 2009 lows, we're up well over multiple hundreds of percentage points. I mean, look at where this SPY was back in 2009. We were around the 67 area. So you're at from 67 to 1677. That's a 110-point move. Percentage-wise, I mean, that is humongous. So the key is here recognizing that at some point, the market will dump. And yes, could the market go up 3%? Sure. Could easily go up 3 more percent. But what happens if it crashes? And I think that's where you have to start analyzing your risk reward. The best traders in the world analyze risk reward. And they say, all right, well, what's my upside potential versus my risk to the downside? And your upside potential here is, yeah, a couple more percentage points. Maybe it squeaks higher, in 3-5%. But what if the market collapses 20%? I mean, just to give up this year's gains alone, which would still put the market up over, almost 100% since 2009 lows, that would be a humongous collapse. That would be a 30% drop or more in this market. So again, that's where risk reward. So you're risking, let's say, that type of, even though it's rare that that would happen, you're risking 30% downside for what, 3% upside. Does that really make sense in my opinion? Now there are certain stocks out there that I like. One stock that I like that I actually have a position in with my members, TWGP, and you can see again, I even traded it a little bit today. But this stock again, dead lows, all the bad news, in my opinion, is in the stock. And, there is some risk here, but it's kind of upticking. If it can break through this 20 MA, it's off to the races. I think it's trying to. And if it does, that's just a no brainer move to probably around the $5 level. So, I mean, upside reward is very nice there. We did play JC Penney last week, and we made 20%, 21% to make an exact call on it. And we bought down here, and then we rode it right up here, and we sold right near the highs. Now it's pulling back, so that was a good risk-reward trade. So I'm not opposed to going long. You just have to really choose your spots carefully, as opposed to being on the short side, which I think you can actually blanket the market quite well. For instance, one of the stocks that we're short, FedEx, down over $3 today. All right, this stock is just too parabolic. I mean, look at this low here. Look at especially the last run, down $3 today. This on heavy volume too. Look at the volume. That definitively, to me, puts in a short-term top. This stock honestly should come all the way back to easily the 127 area right here, which is with the 20 MA. And then obviously, I think there's a good chance of it pulling back to the 50 MA here before it really, any sort of bigger move down in the markets would trigger a sell-off down to this level, which is right around the 118 level. So, I mean, these are just the little tidbits that you want to pay attention to, in my opinion, and really continue to follow. Other stocks that I think are shorts that I currently have positions in, Boeing. Boeing has gone parabolic here. Just this year alone, Boeing is up, 60 plus 70%. I mean, it's really not that far off from being up 100, but 60-70% move on the size of this stock is astronomical. And even a good example of that was on Facebook. I mean, Facebook went into earnings trading near the highs. The earnings were fantastic, but because it's had such a mega 100% run up into those next quarter earnings, which we just got, it just doesn't have the stamina to continue up. And now it's actually making a very bearish pattern. You actually could make a case you have a head and shoulder pattern on Facebook right here. So these are the things you pay attention to, folks. Really important to kind of pay attention to these type of indicators, and they really will help you put yourself in the best position to profit, whether you're going long or short. You always have to put your risk reward in your favor, and we utilize the PPT methodology, proprietary methodology, for that. Okay, so that's what we have going on here, folks, on the charts. And I'm just trying to see what else we have going on. I'm noticing that Dow components are having very strong days. There's a definitive buying going on in Dow stocks. Take a look at IBM today. IBM's up over $2, $2.32. If we flip to IBM, nice move up today here. We also are seeing Chevron. Chevron's up $2.40. That's a Dow component. Exxon's up $1.30. That's a Dow component. So a lot of the Dow components are up, and that's the leading index today. But again, it's only 30 stocks in the Dow, so it's not that much. While the S&P is a lot weaker, just up 0.3%. The Nasdaq by far is the weakest. The Nasdaq's pretty much had the biggest run percentage-wise, along with the IWM, which is the Russell. And take a look at the Russell today, guys. Russell is negative, and by the way, the Russell is a leading indicator. So Russell's a leading indicator, and look at the rollover this has had. Compare it to the spiders. I mean, this is definitely weaker. 3-bar surge, a little consolidation. Looks like a potential breakdown starting here. So in my book, we really are looking at a potential, just based on the Russell being known as a leader, you have to be concerned about where this market's going in the future days. So I continue to look for the possibility that this market can break below that Fed day low on a closing basis. If it does, you should be ready for further downside. That's simple, folks. I mean, it's really simple how I've laid it out for you guys here. You just watch the high and the low from Fed day. And again, the reason you watch that high and low from Fed day, as I bring it back up for you on the 10-minute chart here, is because this was a all-time high and it reversed off of that, eclipsing the previous day. So you have this little reversal, what we call basically an engulfing candle, which is a significant signal on volume too. I mean, there was decent volume that day because of the Fed. So that puts that in, and then since then we've always closed inside of these levels at the end of the day. You've had intraday pierces and closes below, but we're talking end of day stuff. All right, I'm going to get going, guys. Markets are closing in about 15 minutes. Come join us here. Take the 7-day free trial at InTheMoneyStocks.com. Start profiting for life, bottom line. If you're an investor, if you're a swing trader, even if you're a day trader, that's what you come for. Investors and swing traders, research centers what you want. Day traders hover to the intraday stock chat. Take care, guys.